and welcome. This is Mary Ellen McGonagle back with your weekly MEM Edge show, the show where we put you in front of where the action is in the broader markets. So let's not waste a minute, get right in, take a look at our agenda for the week. We are, of course, as always, going to take a look at the current markets on the surface, pretty flat, but certainly we can take a look at some other outside momentum indicators as well. And then earnings as the driver. And many of you know that a lot of mega cap stocks, big corporations did provide their earnings this week, and a lot of other activity going on as well. But certainly some of those biggest movers this week were due to earnings. So certainly a big part of the underlying strength in parts of the market. Also, we're going to take a look at some recovery plays as consumers continue to make themselves known, a lot in the way of stimulus spending, but also beyond. I'm going to share some economic numbers with you coming up here next. Also, we're going to take a look at what I call the run up into earnings. That is a phenomenon that is taking place. I'll share with you some examples, and then from there, some stocks that are currently experiencing that run up, and they are due to report over the next week or two. Also, upgrades following earnings. I think you're going to see a theme here in today's show because oftentimes when corporations come in with good numbers, oftentimes you'll have this nice add-on effect as Wall Street embraces those numbers. So as many of you know, my background with William O'Neill and Company, it's all about earnings, certainly a centerpiece of my work, because those higher earnings historically, they do drive those stocks that go on to outperform the broader markets. So let's take a look at some of the economic data that came out this week. It was a pretty full week as it relates to data. Consumer spending soared in March. I talked about that stimulus, but also we're seeing as more individuals, I believe up to 50%, certainly of adults have been vaccinated. You are seeing certainly optimism, and with that consumer spending, the Federal Reserve came out on Wednesday, and they are continuing to stay the course. By that, I mean provide liquidity and boosting, certainly being very accommodative as the economy continues to grow. Weekly jobless claims came out yesterday, and they are now at a new low since the pandemic began. So this is another area as far as the recovery and this concept that we really are on firm footing here. GDP came in Q1, the first estimated version for that first quarter, 6.4% growth, and that is very, very healthy. Estimates going forward for Q2 are at 8.5%. And many of you may know the primary driver of the gross domestic product is consumer spending. Over 75% of US GDP is consumer driven. And we can see that the consumers are certainly opening their wallets. Core inflation did pick up this week. So therein lies the, I would say, battle, if you will. We're going to take a look at the markets, but certainly growth is good. Inflation, not so much. So we're in a little bit of a tug of war. So let's just take a look here at the S&P 500 to give you a sense of what we have been experiencing here over the last 2 weeks. This is a daily price chart of the S&P 500. I like to use these simple moving averages to help define whether the markets are currently healthy, are they in an uptrend or not. And currently we are continuing to reside above this shorter term 10-day simple moving average. So certainly looking good there. RSI and stochastics, two momentum indicators that I use when looking at indices and sectors, are flashing positively, but certainly they're overall, as the broader markets are concerned, we are very much in a back and fill sideways period. That's not a bad thing. We just 2 weeks ago were up here in overbought position from which pullbacks can certainly occur. But those of you that are subscribers to my MEM Edge report, you will know that this is precisely what we've been on the lookout for, this type of back and fill activity. Those of you that want to take advantage of a trial, go ahead and use that link below. This is a pretty critical period in the markets, very pivotal. So you'll want to stay on top of it. There is a 4-week special. You can take advantage of that. So from here, what I like to do is take us further beyond the broader markets and drill down. Let's take a look at the underlying sectors, the ETFs, so that we can really get a sense of where strength and weakness is. I like to add this RSI, relative strength indicator, descending order. So we're going to see the stronger areas up here on the upper quartile to the left, and then weaker areas to the lower right. So what we can see immediately here, we can see REIT stocks, financials, utilities. Now, normally, certainly REITs and utilities would be viewed as defensive areas because higher yielding and so forth. But in actuality, these are all about recovery. Utility, we can just take a quick look here. You'll see that it really only recently started participating back here in March. A lot of that is about the reopening, the increased need for commercial utility. Vibrancy there. We are going to take a look at some REIT stocks. This is all about recovery as unemployment recedes and further optimism surrounds the growth in the economy. But we would be remiss to not head over here and take a look. Technology, unfortunately, I say unfortunately, this is an area of high growth that I am very much wed to, if you will, but it is showing increased signs of weakness going into this week, and it in fact was the worst performing sector. And we can see as well stochastics, your RSI poised to turn negative, and this was after hitting a new high in price. So this is an area that certainly I'm going to be keeping a close eye. I talked about my report and really drilling down beyond this deterioration that we're seeing to make sure that we are okay over the near and intermediate term. So from here, let's go ahead and drill down even further beyond those sectors. These are industry groupings that I pay close attention to because of their growth characteristics and also because of their ability to highlight the broader markets. So what we're looking at are each of the broader market indices. Small caps are in there. I like to pay attention to the yield on the 10-year, so that's in there as well as some other technology sub-industry groupings. So again, that RSI is here in descending order. And let's take a look up here in the forefront this week. Brent crude did have a nice uptick. Lots of bullish news. We're now at 68.5 per barrel for Brent, and anything above $50 is very bullish for oil producing companies. And we do have quite a few that are on that MEM edge list that are participating in this nice rally. It was certainly the energy sector top performer, up 3.8% this week. So from here, we are again going to go ahead and take a look, making sure that you're aware of some of these weaker areas. And sure enough, within technology, we can see semiconductor stocks, particularly today, down about 3%, finding support at this 50-day. A lot of if you have the ability, you would be well served to drill down behind the semiconductors because not all sub-industry groupings are participating in this pullback. There are areas, again, please take a look at my report and I will share that with you, as well as the individual stocks that are withstanding the overall pressure. Software stocks here, I use IGV, that ETF, and we can see that it is over certainly the last couple of days. A lot of that's going to be Microsoft. They did come out with their earnings and they were not. Actually, I believe it was due to their forward guidance, but Microsoft was down 3.5%. It is this week. It is a major component there. And also, one other area that I did want to point out to you as far as being here up here in the forefront is the Regional Banking Index. This is KRE, Financial's second best performer this week, up 2.5% relative to the S&P that was flat. And a good part of that is these bank stocks. So some nice vibrancy there. So let's go ahead from here, and lots of areas that I certainly want to cover with you. But among them is the fact that despite a flat broader market, there were over 500 stocks that were up 10% or more this week. Now, I'm not saying that to have you feel that you're missing anything. A lot of them were smaller and more speculative. But what I am going to share with you are stocks that have had significant moves this week and could easily be poised for further upside. So as we go through, a lot of this will make sense to you. I'm going to start here by taking a look, sharing with you some of those names. First up, UPS. We can see that the stock had a nice base breakout out of a flat base and has continued to climb. The company came out with record numbers. They also guided higher for the remainder of the year. So when you see these gaps up, a couple of characteristics that you are going to want to pay attention to. Let me see if I can get us to a marked up chart here of UPS and share with you some of those characteristics. So first up is the volume. So when you see these gaps up out of bases, huge volume. Taking a look at it historically, this is telling you institutions want in, and then the subsequent high volume as the stock continues to advance. From here, you can also pay attention to these outside momentum indicators. The RSI is overbought, but you want to take a look at history. UPS, we can go back to this August period, again, an earnings driven gap up, and you can see that that RSI can historically remain in overbought, so potentially not quite as concerning. Another item that can be really quite helpful as these stocks really take on upward momentum is go ahead and add an extra simple moving average, in this case, the 5-day. Oftentimes a pullback to that shorter term can be an ideal buy point, but we can see with UPS, it's not even pulling back. The upside momentum is really quite strong. Let's take a look at a couple of other stocks. And really, this is with an eye toward helping you going into next week and beyond with earnings season. As these companies continue to report positive results, this is what you are going to be on the lookout for. Here's Equifax, EFX. The company reported record quarterly revenue, but again, look at that big volume spike. And we can see that the stock has been able to advance beyond that initial gap up. And really, it's marking time digesting that gap up. But historical precedent will tell you that there is more potential upside following that gap up. A couple of other names that I can share with you, because not all stocks will go straight up following a gap up. This is Shopify, SHOP, came out with excellent numbers. The stock did gap up out of a 2-week base on the news, big volume characteristics. However, oftentimes when you see this type of gap up, you're going to want to pay attention in addition to that stock. What is that industry group doing? Shopify is a software platform for retailers, but at the end of the day, it is a subscription-based software company. So from here, you can take note if the base breakout looks to be failing. Take a look at that industry group. Is that going to be a factor? This is IGV, that tech software ETF we talked about earlier. And sure enough, software stocks overall are pulling back. So that could give you an indication that Shopify's gap up may not hold. From here, you are going to want to pay attention to moving averages. A couple of other areas that really popped up for those of you that pay close attention to economics, the data, you'll know that housing, as far as housing sales, starts, permits, and so forth, they're all at about a 14-year high as far as the growth. So here's an example of a housing stock, MTH, that did experience a gap up. Take a look at the volume, and it's really down nominally in a market that otherwise struggled today. So keep that on your radar, because what happened here upon this gap up on big volume, we had a nice base breakout here. So lots of characteristics there that point to potential further upside. Let's just take a look at another smaller housing stock that also reported this week. This is Century Communities, CCS, that same type of base breakout gap up. And again, a nominal pullback given the extensive move. CCS did report record first quarter earnings. I'm going to take a brief break here, and we have lots more to cover. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. From here, I am going to talk just a bit about that concept of stocks that have these run-ups going into the release of their earnings. So our first example here is SCP Pool. And you can see this gap up here is the actual release of their earnings. However, the company did begin this nice downtrend reversal about 2 weeks prior. And a lot of times, this nice upward momentum going into the earnings release will be due to analysts upgrading their outlook for the company going into the release of their earnings. So oftentimes that is an indication that the stock is going to, in fact, report robust earnings. So from here, let me go ahead and share with you some companies that are due to report their earnings over the next week or two, and they do appear to be in the throes of experience that general uptrend going into earnings. This is Installed Building Products, IBP. They are due to report next Friday, and we can see that the stock has been in a very nice upward trending period going into the release of their earnings. Also, estimates are being revised upward going into their report, which generally can be quite bullish. Next up is Trex, TREX. They're due to report in 10 days, but again, you can see that nice upward trend. The stock did break out of a base, so I would keep that on your radar. Another name, APD, Air Products, and we can see that the stock is not so significant, but certainly generally trending upward. More importantly, estimates are being revised upward going into the release of their report. Just a couple of other names that I would suggest that you put on your radar. This is Shockwave, SWAV. They are due to report in 10 days. And their estimated growth numbers are really triple digit, quite high. And yeah, so that's in 10 days. And then last up, TPR, we can take a look at Tapestry. This is the old Coach company. They do clothing as well as accessories. The reason I'm pointing this out is TPR is very dominant in the Chinese consumer space. China has recovered. They are ahead of us on that recovery curve. And we can see this nice general uptrending phase going into the release of their earnings next Thursday. So that certainly was worth, I would say, taking a quick look at. Let's take a look at recovery plays. I talked about the consumers really coming in. If you drill down and look behind the numbers that have just been released as far as consumer spending, also consumer sentiment, there are definite themes taking place. Among them is auto sales. That's certainly been a big area, but what we're looking at here is Capital One, COF, and the company did just release their earnings. So we had that nice base breakout gap up on the earnings. The company does provide credit as far as loans, and a big part of that is auto related. So that is certainly one area. And then other areas of credit, as potentially people do begin to move, they begin to travel a bit more. These are additional credit related companies. Visa, of course, in a very nice general uptrending. Visa as well as MasterCard does not look as good, but these stocks do benefit certainly even more when we see international travel begin to loosen their restrictions, because as that occurs, their profit margins increase even more. Here's DFS, Discover Financial. They also reported this week. The stock spin is up over 10%, but in a nice uptrend. Let me go ahead and put that additional 5-day simple moving average. You can see it's continuing to find support. And then also historical precedence tells us that when these stocks, particularly DFS, gets moving, you can see these nice uptrends. So from here, I am going to share with you some REIT stocks. You may have noticed that that was the top area as far as strength at the end of this week. And particular areas are seeing more vibrancy than elsewhere. This is Simon Property, SPG, and the company has, they do have a shopping center and malls as a part of their real estate portfolio. I'm just going to see if I can draw a little bit of a base here, and you'll be able to see that the stock has broken out of this base into an uptrend, and they do offer a nice 4.3% yield. This is a combination as far as individuals now being more comfortable mingling as more people get vaccinated, and then also consumer spending really on the uptick here. Another one that we can take a look at on the REIT space, AIV. This is apartment management, and this is one of the largest, certainly considered the best managed of these residential REIT stocks, very much in a confirmed uptrend here. And the company does offer 40, well, I did want to check on that. The yield on that, okay, so it is 1.3, so it's not as high as the other I had seen earlier, but certainly a nice benefit with this particular company. They did come out in mid-March and reported very strong revenues ahead of estimates. And this is all about delinquency rates receding as employment numbers improve. And the company is guiding higher as the economy continues to strengthen. From here, another REIT stock that we can take a quick look at is also in this housing space, and it's a smaller one, CLNY. And the company is again in that same space as far as residential related real estate in a nice confirmed uptrend. One last name we can take a look at, another smaller company, and really it's not that easy to see as far as to define what's going on here, but they do provide or actually manage a portfolio with residential mortgage-backed securities, a very strong area of the markets, but it did have a nice base breakout. TWO is Two Harbors, and they offer a nice, actually, I saw 8% yield. We're seeing 4.4. So might want to check on that. But either way, a nice yield as a benefit there. Let's go move on to another area of the markets that is seeing vibrancy. And this is also a recovery play. We're going to take it outside of the consumer space, broaden it out even further to commercial areas as well. This is NUE, Nucor, nice 2% yielder, and they are a steel stock. I'm going to go ahead and mark the chart up here, give you a better sense of what is capturing my attention, and that is the fact that this stock is breaking out of this nice 1 month base. The company did report numbers, 213% year-over-year growth, and they also had a record quarter, and management did guide higher. So lots of vibrancy taking place here. From here, I am going to be on the lookout for that MACD black line up through the red, telling me that there's a nice uptrend. We already have that RSI up here trending upward in positive territory. And then one other steel stock that also reported stellar results, good old US Steel, X is the ticker symbol. Now this one is not acting quite as constructively. They did report 248% year-over-year growth. However, this pullback to this 50-day, we can see historically that has acted as support. So again, keep your eye out for that momentum shift down there. One last area we would be remiss to take a look at is energy, top performer this week. This is Hess Corp. And we can see this nice advance here. The company came out with 237% year-over-year earnings, 158% above estimates. So we did get that nice move on Wednesday, and actually it did cause a base breakout. Nice volume characteristics. One other energy name that we can take a look at, subscribers to my MEM Edge report will know this one. This is Diamondback Energy, FANG, poised to break out their earnings. They have not quite yet reported, but these stocks certainly are worth paying attention to. Let's take a look. I have a little bit of time left here to go over that concept of companies that report strong earnings, and then what I call that add-on effect. Analysts come in and raise their estimates. Here we have FLWS 1-800 Flowers. They surprised to the upside. Take a look at this huge volume. The company did see it's up another 7% in a very tough market as analysts came in today and upgraded the stock. Keep this one on your radar. TXT, another one, came out with numbers, 100% year-over-year earnings growth. Today, yesterday they reported, and then today we are seeing analyst upgrade, another nice 2% advance on the upgrade. CYH is Community Health Systems, and they also reported earnings 123%. What we're seeing here is a nice downtrend reversal because the stock is now breaking up above its simple 21-day simple moving average, RSI just turning positive, MACD poised to have that momentum shift crossover, which historically can get you in front of these nice turnaround moves in these stocks. So one other name that we can take a look at very quickly here, reported strong earnings. This is Cogent, CCOI. Big gap up on those numbers. Analysts immediately came in and are revising those estimates higher. So all quite constructive looking for this stock. I'm going to leave it at that. Again, hit that like button if you like what you're seeing. And of course, take advantage of that 4-week trial special for my MEM Edge report. Have a great weekend.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.